The Governor of the Central Bank of Nigeria, CBN, and the Chairman of the Monetary Policy Committee, MPC, Mr. Olayemi Cardoso, has announced key decisions from the 301st Monetary Policy Committee meeting held from July 21st to 22nd, 2025. After assessing current economic conditions, the MPC voted to maintain the monetary policy rate at 27.50%, with the asymmetric corridor retained at plus 500 minus 100 basis points. The cash reserve ratio stands unchanged at 50% for deposit money banks and 16% for merchant banks, while the liquidity ratio remains at 30%. The committee's decision reflects its continued focus on stabilizing prices, supporting the naira, and anchoring inflation expectations. Governor Olayemi Cardoso highlighted the recent positive developments in the inflation outlook and exchange rate dynamics.
Maintaining the current policy stance will continue to address the existing and emerging inflationary pressure. The MPC will continue to undertake rigorous assessment of economic conditions, price development, and outlook to inform future policy decisions.
Mr. Cardoso also stressed the need for strong collaboration between the fiscal and monetary authorities to tackle underlying economic pressures.
The committee acknowledged the efforts of the federal government in improving security and its impact on food production. Members thus urged the government to continue its support towards timely provision of high-yielding seedlings, fertilizers, and other critical inputs for the current farming season.
Committee members acknowledged the favorable impact of rising crude oil prices and the relative stability in import costs on the domestic economy.
The MPC also noted the sustained stability in the foreign exchange market, accentuated by improved capital flows, earnings from increased crude oil production, rising non-oil exports, and significant reduction in aggregate imports.
On the committee's forward guidance, Governor Cardoso reaffirmed the MPC's commitment to proactive policy making.
Members also noted the continued stability in the banking system, evidenced by the stable financial soundness indicators (FSIs), which would further be supported by the ongoing banking recapitalization exercise. The MPC noted that 8 banks have fully met the recapitalization requirements, while others are making progress towards meeting the deadline. The committee thus urged the management of the bank to sustain its oversight of the banking system to ensure continued resilience, safety, and soundness of the financial system.
The next MPC meeting is scheduled for September 22nd and 23rd, 2025, where the committee will again assess the macroeconomic environment and determine any necessary policy adjustments.